Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Thursday, February 29th, 2024. Let's take a look at the charts. Start with the big picture as always and end up with the day itself. 175.08. This is a weekly chart. It goes back to the July high of last year, this formation. This former channel top we settled above months ago, fell back to it in I think this was in December, January, held nicely. It is still a base of meaningful long-term support that, if tested, say over the next week or two, can absorb selling through March and even through the second quarter. And from here, we can round back up into the mid to upper 190s at least, possibly higher. I say mid to upper 190s because I'm really referring to, on the daily chart, these channel structures here that are coming across these highs based on the recent set of lows from early December and early February. 195.17, 178.97.15. In fact, you can see everything here. That 175.8 formation, that channel top on the weekly chart, is 174.21 on the daily chart. If we fall into this zone, then we can rally into what I'll call the mid 190s, because these channel structure, this band of channel resistance, would shift lower because the angle would be different. I don't want to get into it too much, but I think you can understand what I'm saying. In other words, if we bottom out in the mid 170s, and I would expect as much if we were tested, we can round back up within a month or two into the mid 190s, and that will be, this area is a significant upward pivot point into later year if settled above. That is the big picture in a nutshell. And so let's talk about the day itself. Most of you are tuning in for kind of the day, the 3 to 5 day dynamic, 2 to 3 weeks and out. I still have 180.33, this simple short-term channel structure that is backed up by a trend line at 180.48, 180.33, able to contain session weakness, and above which channel resistance, short-term channel resistance at 184.69 remains in play. Could be today, could be the next few days, but it is in play. And that is kind of the two-sided dynamic as we move into next week. 184.69 resistance, and we have 180.33 support. Now, if we do break or open today below 180.33, 178.38 is likely. Simple trend line off these January, February lows. But if we close below 180.38, that does set up a 3 to 5 week sell signal into the mid 170s, 175.08 to 175.74.21. Even there's all kinds of stuff going on in the mid 170s, as I've been saying now for the last a week or two. We also have a descending channel bottom based on the December, January high at 175.57. So it's really sort of pick your spot, beginning at 175.57 down to 174.21. This area, 3 to 5 day target. If we were to close today below 180.33, the 175.08, 174.21, let's just call it the mid 170s, once again able to contain selling not only through March activity, but also through the second quarter. Upside today, if we close above 184.69, that is a 3 to 5 day up pivot. I think it's going to be more like 1 to 2 days with present volatility. Closing above 184.69, 189.11 becomes a 2 to 3 day objective. So in terms of the 3 to 5 day or 2 to 3 day swing trade, you're either A, selling a settlement today below 180.33, then expecting the 175 handle long-term support, or B, you're buying a settlement above 184.69, then anticipating 189.11 speed line resistance. At 189.11, we can top out through next week and even fall away as we move into mid-March. It would be a settlement above 189.11. That would clearly indicate within 1 to 2 weeks this 195.17 to 197.15 area. I wish I could say that we have an indication for this upper area now, but I don't. You're either anticipating the mid 190s, either A, once we test the mid 170s, if we test the mid 170s, that is your buy your pullback support to buy into in anticipation of bullish rotation back into the mid 190s, or B, you're buying on strength, then expecting the 195.17 to 197.15 area. You really can't say that if we close above 184.69, we can expect the mid 190s. And you really can't say that you can bottom pick 180.33 in anticipation of the mid 190s. It just doesn't look that way to me. If we were to once again close above the mid to upper 190s, longer term bullish continuation as we move into the third and fourth quarter of this year. Until then, you can see here we're kind of in this two-sided framework, which explains all this multitude of 3 to 5 day levels. 180.33, 184.69, 189.11, so forth and so on. And it's about as simple as that. And I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. This week alone, we put out 2 stock picks, one on Google, Alphabet Incorporated, as well as Macy's. Both are approaching significant trend-defining levels that offer opportunities on a multi-week and multi-month basis. We give you the precise points and the targets as well. And we update you every week on those objectives. And if you go to wickedstocks.com and sign up for the subscription, you get 5 days free right up front. So if you don't like what you see after 5 days, you can cancel your subscription at no cost to you whatsoever. You also get the Triple Q and the SPY on a daily basis, as well as weekly analysis in the S&P 500, NASDAQ 100, and the TLT, that is the long bond ETF. I'm going to leave it at that. Please click like, share, subscribe. I'll be back tomorrow with Friday's Apple Report. You have a great day.